You will be broke by Friday if you trade futures the same way you trade the spot markets. Before you think of trading futures, before you even click that buy or sell button, there is some truth you should know. Ignore it and you lose your funds faster than you ever imagined. Most of us join the futures trading after seeing screenshots of huge profits, not knowing that behind those big profits, there are losses, there are mistakes, and there is discipline these consistent traders follow. So most of us just jump on the bandwagon and don't recognize that. So what is futures trading and why should one embark and involve themselves in crypto trading? In this series of the 30 days, we are going to know all that for free. So all you have to do is follow, comment your question about futures trading, and add these videos to your favorites so that you can come back anytime. So futures trading is the art of predicting that prices will either go up or down, and if they go in your direction, you make money, and you do this using borrowed funds or what we call leverage. And you know the biggest problem is that leverage multiplies or magnifies both your gains and your losses. That is why it is a double-sided sword you should use with caution. So, what is the difference between futures and spot? With futures, we are using borrowed money and we do not own the asset we buy. We are just predicting that the price will go up. If it goes up, you make money. If it goes down or against you, you lose money. Then with spot, whatever we buy, we own. Meet Ishimimana and Nabisele. Nabisele decided to embark on her spot trading journey. She bought Bitcoin at $60,000 and she held it. When the Bitcoin dropped by 5%, she felt bad, but she didn't lose her money. She still owned her one Bitcoin she bought at $60,000. On the other side, Ishimimana decided to invest in the futures market with $100, and she said that Bitcoin will go up by $61,000. Get what's happened? She didn't use stop loss and she used a 20x leverage. When Bitcoin dumped by 5% to $50,000, she lost all her money at once. This is because in the futures market, you don't own what you buy. You are predicting price movements. You saying the coin will either go up or down. And if it goes in your direction, you make money. If it goes against you, you lose money. Both Nabisele and Ishimimana entered the market at the same time, same coin, but different markets and different trades. That is why Ishimimana ended up losing all her money and Nabisele still owned her Bitcoin and her money even when the market dropped. In futures, a dip may be your funeral, while in spot, a dip may be a discount for you to buy more at a cheaper price. Futures trading isn't only about predicting the direction of the market. It's also about how you manage your risk, how you use your leverage, and also how you calculate your position size. All this we are going to see in our next videos. So I guess you followed and commented your question about futures trading. Also remember that leverage doesn't only multiply your wins, it also magnifies your emotional mistakes by 10%. So you should be very cautious when using this leverage. And what on earth is leverage? Leverage is borrowed money. That is the money they borrow us in the future so that we increase or enlarge our position in the market. We are going to see all these terms as we proceed in our days of learning. And for you to survive long in the futures market, accept this reality. You're not an investor anymore. You are a risk manager. Because if you don't manage your risks, you end up losing money. So for day one, write this down. Futures doesn't magnify only your profits. It also magnifies your emotional mistakes and speed. Know that and know peace. As we conclude, note this. Futures isn't about getting rich overnight. It's about making disciplined decisions, managing risk, and protecting your capital. If you don't do this, you're going to end up in the pit we mentioned at the very beginning. Guess what you're going to do? You're going to follow this page and add this to your favorites so that you don't miss out on day 2, where we're going to be explaining common terms used in the futures markets. Do you want to miss out? I guess not. So do well to follow. Happy trading.